go short the currency, go long the property. And that's a time-tested investment strategy by pretty much every successful investor. I think if you look at it as digital property, it's pretty clear there are billions and billions of people that would rather own digital property than physical property. And I think that the most forward-thinking use case is Bitcoin as digital energy. If you go on Twitter, you find like in 1 hour, 500 Michael Saylor bots. They all get spun up. If you go on YouTube, there are about 500 to 1,000 Michael Saylor Bitcoin giveaway scams every week. We take them down every 15 minutes. The world, the cyberspace is beset by scammers, phishers, denial of service attacks, spammers, and it's never been worse. It's literally awful. And the reason it's awful is because no one's got any skin in the game. Or another way to say it is, there's no conservation of energy in cyberspace. I can go into a hotel in the real world, post a credit card, smash up the hotel, and they charge me money. But what if I could go into every single hotel on Earth, in every hotel room in every hotel on Earth, using a Python script and smash them all up and not get charged any money, right? The entire world would come to a grinding halt. And so that's the status quo on Facebook and YouTube and Twitter and Office 365 right now. And you're watching the front page of the paper. If you look at the Wall Street Journal today, massive amount of cyber attacks being launched on Ukraine right now. They're all denial of service attacks. Denial of service attacks is like when someone hits your website with 15 million requests in an hour. They can do that because it doesn't cost them $1 a request or $10. So if you want to solve the problem of cybersecurity and make cyberspace safe for children, and if you want to eliminate hostile cyber attacks, and if you want to clean up Twitter and YouTube and stop con men and phishing and scamming, the simple solution is let someone get an orange check mark next to their name if they post $10 worth of Satoshis. And you would have 1 billion orange checks. And now you lock down all websites and all inboxes and all comments to people with the orange check. And of course, you would only have to post $10 once in your life, which is fine because you're not going to denial of service attack someone. But if I'm a hostile bot, like these people that actually impersonate me on YouTube, they have 40,000 live bot listeners. They would have to post $400,000 in Bitcoin every 10 minutes or every 15 minutes because they refresh every 10 minutes, Mackenzie. If you did that, it would cost you $40 million a day to launch that attack instead of nothing. And so the compelling application of Bitcoin is it's a layer of monetary energy that you can overlay over the digital information of the first generation internet. I think that the volatility is driven by the immaturity of the asset class, and that means the lack of wash trading rules. You can buy it and sell it in the same hour and harvest a tax loss. I think that's fairly immature. I think 20x leverage on the offshore exchanges. I think the wild west of crypto derivatives. I think cross-collateralization of altcoins into ETH, into Bitcoin through DeFi exchanges on a Saturday night through a very thin piece of liquidity on the 177th biggest coin. All of those things are a recipe for volatility. And then the uncertainty about the regulatory environment, because as regulation comes, it has an impact on all these different crypto systems, and they're all cross-collateralized to each other. So I'd be surprised if there wasn't volatility. It comes with the territory. There are pros and cons. I think that the volatility will be damped as the regulation progresses, and that'll encourage institutional adoption.